Now it's time to talk about my real estate startup, HouseHack. In this video, we are going to go through the fundamentals, including the balance sheet. How much money does HouseHack have? Where is the money? We're going to talk about the income statement. What kind of income do we have and what kind of expenses have been billed to HouseHack through January 24th? How much of Meet Kevin's personal private jet is being paid for by HouseHack investors? And what kind of potential benefits do HouseHack investors get from Kevin flying around in a private jet? And why is Kevin asking to potentially raise more money in the future when he has a private jet and investor money? How are we going to reconcile all of that? Well, we're going to do that by being transparent about financials. I think transparency is incredibly important. And the first thing that we have to be extremely transparent about is we did not raise as much money as we hoped. During the disaster that happened, we actually got more commitments than we could have ever dreamed of getting during the craziness of the market last September, October. We got $27 million in commitments, which was really phenomenal. That blew away our expectations. But we did not get as much follow through as we hoped in that because people complained that their money went down in the markets. And so what we have is about $23.3 million in assets. Most of that sits in LPL. So I'll show that on screen now. This is the HouseHack balance sheet as of January 24th. So remember, here's how fundraising works. So when you do fundraising, you have people commit money and they say, look, I am going to commit, $100,000, right? And so we got $27 million of commitments and we got follow through of that of about 23,093, which is actually not bad. So this is substantially more money than we thought we were going to raise, which is great. But it is the follow through, we were hoping that ratio would have been higher. So 23 divided by 27, it's actually not bad for private equity. That's over an 85% fill rate. So 85% came through, which is great. A lot of venture capital these days is sitting at somewhere around 20% coming through. So in other words, if you got 100 mil in commitments, you might only get 20 mil. That's like a lot of venture capital, right? And the beauty about how we raised money for HouseHack is, guess how much money we spent to raise $23 million in terms of advertising for investors? Zero. We spent zero money advertising for investors because we used YouTube. That is freaking insane. It is insane that in a hellish bear market and recession, we were able to raise $23 million in actual money with zero fees from like platforms that wanted to take fees. There are a lot of platforms out there, like people like, oh, why don't you list on like Start Engine or what? And this is not to poop on Start Engine. I'm sure Start Engine is great for people who don't have a YouTube channel, but they take a lot of money in fees, and I don't want to pay any fees. So I think we did really, really well here. Soon, in April, and you can invest if you're an accredited investor now. You go to househack.com. Actually, if you sign up before the end of the month here, January 31st, you still get more warrants than anybody who would in April. I think you get like 20 or 30% in warrants, which is really great. It's sort of like a free stock option almost. It's not the best explanation, but just read the prospectus on househack.com and you'll learn more. That's also where you can go to invest. But anyway, in April, we plan to do a Reg A. My goal is to double what we've raised with the Reg A. So my goal is to go from about 23 mil to hopefully about 46 mil. This is the goal. I would say 40, under 40 is not ideal, but we'll figure it out. I would say that ideally we're probably looking at, or like best case scenario is like 50 plus, right? 50 plus, that would be the best case scenario for the Reg A. And the reason for this is we have a strategy that we're going to be revealing when the Reg A comes out that potentially lets us print cash flow a lot faster than we thought. Now, knock on wood, I can't guarantee that, but we've come up with a way that we can basically milk the crap out of these wedge deals and make HouseHack a lot of money. And we think it's an incredibly low risk, hard work, but low risk strategy. And we can't wait to reveal the details of that when we get closer to our Reg A filing and it gets the stamp of, or sort of the green light to raise money, should I say, from the SEC. So all of our prospectus and everything for the Reg A filing will be going through the SEC over the next few months. An accredited round is a 506D round, which does not actually go through SEC review. And the next round will be going through SEC review, and that's how you unlock basically the non-accredited pool, right? So that's going to be really, really cool. And I expect that in April. Hopefully sooner, but I think realistic is April. So anyway, HouseHack's financials, we have a checking account, $538,000 in it. A wire in account, we just got a wire of $130,000. So usually the wire money gets moved from the wire in account to the checking account on a regular basis. LPL, these are our bonds. This is where we have $21.5 million in treasury bonds. Those are paying us good dollars. Now, people wonder, they're like, Kevin, is that going to be on the income statement? No. And people are like, wait, so are you taking all of the interest money? No, that's not how bonds work. We are making roughly on $21.5 million, roughly a yield of about 4.25% net of any fees, roughly. That works out to an annual interest yield of about $913,000. That means those bonds are basically generating about $76,000 per month in income. And so some folks are like, Kevin, well, where does that money go? They come when the bonds mature. That's very important for people to know, because bonds, the way the treasury bond market works, is you don't get a monthly or weekly check from treasuries. You buy bonds at a discount. So you buy, in this case, if these were all 12-month bonds, which they're not, they're a ladder portfolio. But if we bought 21.5 of bonds, we would have actually had bonds that are worth $22.4 million. That's how bonds work. So you buy $22.4 million worth of bonds at a discount at 21.5. That's how the bond market works. So in other words, you spend 21.5 to buy bonds that are worth 22.4. And so once those bonds mature, we get a bucket of cash, which is probably, those maturities are going to happen roughly around when we expect to buy real estate, which is perfect. So in other words, we get a bunch of free money for the company for HouseHack investors. HouseHack gets this benefit, not Kevin, okay? Be very clear about that. I know there's cynical people and curious people, so I just try to be as transparent as possible. I think this is the easiest way to do it. So LPL brokerage account. LPL brokerage account is, again, that's those are the treasuries. Stock subscription receivable, that is a personal guarantee that I am contributing at least another $925,000. And that's a personal guarantee that I've made. So like I've signed a debt instrument that I'm contributing at least another $925,000 in addition to what I've already contributed. And I expect in the long term, my total contributions to these early rounds will probably, before the rounds close, probably be somewhere between $2 to $5 million. I'm probably going to get that to closer to 5, but it depends what the market does and what situations are. So that's dependent. Then we've got our wedge finder, which is wholly owned as an asset by HouseHack of about $269,000. What do we have over here? That's money owed to the Pathrath org. I've got to look at how exactly some of this is balanced out. But there are basically some back and forth of nominal amounts of a few $100,000. I know that doesn't sound like a nominal, but basically we have everybody who is employed. Like HouseHack has 0 employees, and so that's where some of this might look a little tricky, but these are nominal numbers anyway. But basically, here's the employee structure right now. Oh, and quick note, before I mention the employee structure, there's a current liabilities section. That turns into equity when the fund closes. So in case you're wondering why the money from investors is deemed a liability, it's deemed a liability now when the fund round closes. When we stop raising money and then we move from fundraising to operating, that becomes equity, investor equity. HouseHack has 0 employees, $0 of employees. And all of the employees, which there are a lot, there's the construction team of 4, and these are going to be our property management team in the future. All of them are employed by me, which is the Pathrath org. That's my personal company, right? So we've got a construction team. We've got two contract CPAs, which are really good. We've got contract bookkeeping. We've got 4 staff on top of that, and I'll say potentially 4 to 5 staff on top of that. Roughly 4 to 5 staff on top of that. So in other words, we have 4 plus 2, 6, 10 to 11 staff basically. All of that staff is being paid for by Kevin Pathrath. Kevin Pathrath is paying a boatload of payroll this year. And what we plan to do is as HouseHack starts, well, first of all, we're going to, the Pathrath org is going to bill some of our CPA expenses and investor relations expenses, obviously, to HouseHack. Some of that has already been billed, some of it still gets billed. The rest of the payrolls are on me, and that's because they're mostly working for things for Kevin right now. And as time goes on, as we go forward, I'm able to take employees who are really good at already working with me and my team and slowly move them to the HouseHack payroll as they transition to solely working for HouseHack. Now, the beautiful thing about that is how normally businesses operate. Is normally you would pick people up off, like you would hire people cold, right? And that's dangerous. So like a usual startup hires new people who aren't used to working with a boss. That's the usual way. And there's a risk in that because what if they're bad employees, right? The lower risk factor for HouseHack, which is awesome, is that Kevin already has amazing people. It's basically a free asset for HouseHack that we could take amazing people, if I could spell it right here on screen, we could take amazing people and slowly shift them over. So eventually, as we're actually buying real estate and managing real estate and fixing up real estate, that's where we start seeing the expenses move up for payrolls. But right now, the beautiful thing is HouseHack is cash flowing substantially because of the value of those treasuries going up. So this is the full balance sheet here. And if we now go to the income statement, you could see that here. We have wire fee income of about $5,200. We don't show income here because there is no income for the company. So we've got wire fee income of $5,200, although we have had bank service charges of somewhere around $6,900. We've had some startup incorporation costs of about $220K, some nominal audit fees, computer and internet expenses about $4,000, startup incorporation costs $220,000. So really, we've spent about $226,000, and that's it. You'll notice there are no travel fees. There's no plane fees. There's no plane asset. There's no plane ownership. There's no plane billing, right? There's none of that. There's a simple reason for that. Kevin Pathrath and Lauren, we can't forget about Lauren, and Lauren, we write that in, and Lauren, have personally taken liability for the plane. And Kevin pays for the plane. And the reason for that is I personally see the plane as a very, very big tool for making sure that I can be where I need to be myself to make sure I can operate this startup as efficiently as possible and make sure that I can create the teams I need to and basically build my startup in different areas. And so YouTube's paying for the plane, which is great. And I expect it to stay that way for as long as possible. And I take no salary from HouseHack. So the beautiful thing is we have some really cool things going on at this startup because we have a lot of basically what I call them risk mitigators, right? Which generally startups don't have. So the risk mitigators that HouseHack has is, first of all, it's in the real estate business, which I personally deem to be a lower risk business. It also has the asset of already solid employees. It also has the asset of Kevin's expenses being covered by YouTube. It also has the asset of free marketing via YouTube, which leads to lower expenses for HouseHack. It also has the asset of having bought bonds at probably peak yields, at likely peak yields. This is great. It also has the asset of Kevin buying real estate in a wedge deal format that has been extremely successful in the past. There we go. And it has the proprietary AI that we have. If I can spell it right, there we go. AI that we have on finding wedge deals in broad markets, right? So what I think is so incredible is there unfortunately, there are always going to be haters and there are always going to be people who are critical of businesses that you operate. And that's fine. Like I'm totally fine with people having commentary and critique. But oftentimes commentary and critique can go to this state of just untruths and lies. And I think the easiest way to combat that is just being completely transparent. And the complete transparent method, I think, is just put sheets up. And eventually we can show the SEC's reports on all of our sheets as well, which will be really cool. And then we have, and our financials have been audited as well, which is fantastic. They go through literally every single expense, and they provide a statement of opinion going, it is of our opinion that these financials are accurate. And it's, who was it? DB McKinnon was our auditor. So huge auditing firm, right? These are all big deals. These are all a big deal. And then all of it goes to the SEC. So it's really, really exciting. It's a process that I'm very excited about. And I think investors should be as well, because I think we're, like, my goal with HouseHack is, like Kevin's goal is to make HouseHack so ridiculously, I can't even spell it right now, ridiculously successful. And this is not a guarantee, right? And I'm going to say no guarantees, obviously. I don't want to get sued here or like in trouble. But my goal is to make HouseHack so ridiculously successful that in the future, if I want to build a rocket ship company, okay, I'm just making this up, okay? But if I want to build a rocket ship company, other people will want to invest with me because I've previously done well, right? That's my goal. So that's my vision. And I just want to be as transparent as possible about the whole process. Like, it's not going to be easy. It's going to take a lot of work. And people are like, well, why, why buy a jet? You just want a luxury lifestyle. But people who say that don't understand what I'm about. I work like crazy. And all I do is work more. I go to sleep and I dream about work. I wake up at 3:30 in the morning to work hard and provide value on YouTube. Then I go team build. Then I go fly around and try to be the best expert and asset that I can, basically to HouseHack for free. Not charging a salary. The plane isn't being built to HouseHack. HouseHack's getting all these assets for free. They're risk mitigators. It's insane. Now, that might change at some point in the future. Like, who knows? And the reason, for example, something like, what if, for example, every investment that Kevin has personally made loses all of its money, and Kevin's income goes to zero. Everybody stops watching Kevin. Yeah, there are risks. And so it is a startup, right? So it's always worth noting there are risks. What if the wedge deal model doesn't work? I mean, I don't see that not happening. I don't see that failing, but of course there are risks. And everybody who would invest in HouseHack needs to be a big boy and or big girl and put on their big boy and big girl pants and realize there are a lot of risk mitigators, but there are risks. I'm not ever going to say that any kind of startup investment is risk free. It's absolutely not. But I could not be more excited about our path, especially what we've developed in the last few weeks in terms of our course for what we're launching for the Reg A. In other words, our path forward and our plans forward. It's going to be really, really exciting. And I'll give you a spoiler alert. The spoiler alert is we expect the cash flow that we're going to be able to generate at HouseHack and the way we're going to be able to mitigate our OPEX is going to be remarkable. We think there are ways to substantially prevent the need to raise future money for HouseHack while potentially exponentially expanding cash flow and creating something that hasn't been created before. Again, no guarantees, but we'll provide the full roadmap, and I think a lot of people are going to go, oh, damn, like that does make sense. The model has been done before in the solar industry. It has not been done before in the real estate industry. So the model exists, and it's really, really, really lucrative. So this is why I'm so excited. But anyway, that is a breakdown. Right now, the minimum for an investment into HouseHack is $25,000. You have to be an accredited investor. You can become an accredited investor by going to househack.investready.com or just go to househack.com to learn more. You get your accredited letter, you upload it, you can invest. When the Reg A comes out, you will not have to meet the rules of being an accredited investor, which is generally $250,000 income as an individual. I believe it's $300K as a couple, or you can qualify on the basis of net worth, which is a little more complicated. For non-accredited investors, we would expect that the minimum investment's probably going to be somewhere around $10,000 to $15,000. I haven't precisely determined that yet, and we cannot accept Bitcoin or Ethereum, sadly. One of you was asking that here. Unfortunately, the SEC is not a big fan of funds taking money in Bitcoin or Ethereum. So that's not something that's going to be possible for the time being. If other people have questions, what I'm going to do is I'm just going to open up the chat here to anyone. So if you have questions, feel free to ask. But yeah, I'll just be very clear. Very, very exciting. Mr. Futt says, no diluting investors over and over. Great plan. I mean, I think that's necessary because, again, what's Kevin's goal? It's Kevin wants to make it clear to the people who are taking that leap of faith in Kevin that Kevin's doing the right thing for the investors. Like, that's always so important. Do you think there's a ceiling on Wedge Deal, a point where it becomes difficult to scale? No. That's honestly what's so exciting too. In 10 years, we could be doing this internationally. The potential here is unlimited. It is so unlimited at this point. It is absolutely ridiculous. So ridiculous. Any issues with investing from Canada? No. If you're an accredited investor, you can invest in Canada. You can invest from whatever country you want. I don't care. Your money's green. Doesn't matter to me. Will HouseHack be investing in Dallas? Maybe. Will I be able to invest from Saudi Arabia? Of course. Yeah, you can invest internationally. You can absolutely invest internationally. As long as you meet the US accredited rules, you could do it now. The benefit of you investing now is you get more basically call options. They're not really call options. It's a little bit more complicated. Just go to househack.com. The valuation's 1-to-1, so it's whatever we raise as the valuation. Let's see. I want to remember what our what the warrants were. I want to say it's, yeah, fund before January 31st to receive 20% free bonus warrants. But if you're a course member, you'll get 30% free bonus warrants. That'll be at 0 by March 31st. Unless you're a course member, then at least you get 10%. So, okay, looks like there's a lot of Q&A on this. You cannot get exposure to HouseHack through an ETF, unfortunately, because ETFs can only invest in public companies, and HouseHack is not public. Let's see here. I wish I could invest in HouseHack. I'll be supporting from afar. Well, appreciate that. While I learn from the courses that I purchased. Well, thank you for that. That's awesome. Dang, when the reggae minimum was 5,000, I was in. If it's 10K, I gotta be out. It might be 5K. So it just depends. TBD. I have no idea what your $25,000 will turn into. I have no idea. I hope a lot of money, but I can't guarantee that. I see your shout outs here on South Carolina. That's awesome. Warrants for reggae investors. Probably the only warrants for reggae investors would be 10% if you're a course member, which is better than nothing. A lot of our investors, by the way, right now are course members. Like I said, and it's either because of the warrants or because they just love the course. I don't know. But for accredited, okay, you're going to think I'm crazy saying this. I promise you I did not make this number up, but I'll tell you exactly how many investors we have. And then you could sort of divide the average investment. But this is insane. I'm going to put this number on screen, okay? I promise you I'm not making this number up. My CPA told me this, and I almost started dying laughing. This is how many investors, accredited investors, we have right now. The numbers on screen. Which if you divide about 23 million by that number, which is 420, you get to an average investment per investor of $54,761 per average. Can't make it up. It's pretty funny. We were at 423, but 3 people couldn't, they sent money, but they ended up not being accredited, so we had to send their money back. It was like $150,000. It might have been 160. It was like 160, something we had to pay back. And that was, that brought us to 420. Imagine if the average investment was 69K. You know, y'all got to pump it up, man. Goldman Sachs just released a list of the top 4 cities that will fall the most. Austin, San Diego, and Phoenix. Yes, those are on my radar. El Paso in the house. That's awesome. Good commentary here. You should come visit homes from course members that you reviewed in escrow over the year. That would be really cool. When could investors expect to see a return? Yeah, so potentially sooner than we expected. So originally, and this is, I can't guarantee this, right? But originally, we said that we would not offer any kind of return until we IPO. With our new model, we might be able to start paying out dividends substantially faster than we expected. If our cash cow turns out to be the cash cow we expect, probably will pay out dividends. If it works. So I want to be very clear. If our vision works, which is not a guarantee, I am not guaranteeing you any money. I'm guaranteeing you nothing. Please don't sue me in the future saying I promised you the moon. I'm, okay, I'm making this very clear. I'm very optimistic. But if our plan works well, we'll probably pay what could be substantial dividends. Or let me rephrase that. We may pay what could be substantial dividends, but no guarantees. So in other words, we would be shifting away from the idea of you not seeing any return until the IPO, which I think is another good for investors. It's very different from like Cardone's pure syndicate model. I think Cardone's syndicate model is very nice for Grant Cardone. Very nice for Grant Cardone. But hey, you know what? Don't hate the player, right? The syndicate model is what it is, and people can read the prospectus and know what they're getting into, and people should. But I think the fees are a little excessive on some of the fees on the syndicate model. And look, I have no qualms with Cardone. People always like, oh, you know, first you bagged on Cardone and now you don't. It's like, no, I'm still upset that Cardone for years has told people don't buy a single family home. I think that was criminal. I think it was criminal to tell people. Obviously, it wasn't, okay? I'm just saying that. And this is not me trying to bag on my competition. I actually think he's changed his opinion, right? And so I give him credit where credit is due. I think Cardone has changed his position, and now he tells people it's liquidity by single-family homes. But my original qualm with him was he said you can't make money on single-family homes. And I'm like, you're nuts. You can make a lot of money on single-family homes. And anybody who didn't buy a single-family home listening to Cardone between 2010 and 2021 lost a lot of money not investing in single-family real estate. And if now, I don't know, I don't watch him, but if he's changed his opinion and to say that, hey, it's okay for you to buy a single-family home, then good. IPO time frame. Hopefully 6 to 8 years, or with I really, my goal is to do so before the end of the decade. Oh my God, it's not anything near Open Door. Open Door is flipping homes with high selling fees and high market risk. We would be very, very far away from that. Would you start a HouseHack app to compete with Redfin and Zillow? Unlikely, because I don't think there's a lot of money in doing website listings. There are a lot of companies that do that, and they make no money in that. Listen, my goal with HouseHack is to make money for everyone. I want to make lots of money, and I want my investors to make lots of money. It's that simple. It's all driven by dollars. If I do well, you do well. I expect to ever only get paid in stock, with massive lockups after IPO, and obviously a return on the stock that I invested alongside you at the same valuation. So, whether I invest $1 million or $2 million or $5 million, whatever it is, it will be invested at the same valuation as you. And I think that's very fair. That's also very rare. Will HouseHack rent the jet from Kevin's media company? I don't expect so. It's possible if that becomes reasonable ever. It's very difficult to say that's anywhere close to reasonable now, so I don't expect anywhere near the near future. And if ever, it would have to be billed at such extremely low rates that the media company would still be eating the bulk of the cost, right? Like, it's very reasonable to say, hey, if you have 9 people on a plane who are actually working in real estate and actually need to be somewhere, that you could bill the equivalent of commercial tickets and hotel fees, but those would be very nominal to the point where it's just not even worth thinking about that. I don't expect anything like that in 2023, and I hope that never is necessary. So I don't expect that, no. But could there be some kind of nominal reimbursements in the future? Of course, but that would be very reasonable, right? All right, hold on one second here. Why not focus on HouseHack at this point? Is the channel to get a... Well, sure. I mean, okay, so then people ask me, like, why still focus on YouTube? YouTube's the top of the funnel. YouTube is how we find investors. YouTube is a free benefit and perk for HouseHack. And it will be a future... it may be a future cash flow generator for HouseHack. YouTube is also what pays for my ability to fly around and actually run the company at this point at no cost to HouseHack, right? Why would I give away that? I wouldn't. International investors can today invest in HouseHack. Absolutely. Absolutely. Elite Hustlers University gives a lot of step-by-steps for starting a business from scratch. I don't know that we've built it in the perfect, here's your step 1 to 10 plan, but there are videos where I go through step-by-steps for starting businesses, but there are many of them, so it's really fun. Would HouseHack consider buying for directly from builders? Potentially, yeah, but we'll see. See, I don't care if the US dollar goes bust in my lifetime because we're going to own assets. We're going to own real estate. No, we're not going to use ChatGPT to buy homes. I don't think that I would take a buyout offer for HouseHack because I want HouseHack to go public. That's what I want to ring the bell with HouseHack. Can you really quickly explain how HouseHack differs from Opendoor? Well, you're going to, I mean, look, Opendoor buys homes, thousands of homes, and then flips them on the market. And they suffer from massive, horrible purchases up front. They're not buying wedge deals. They have a very clear mission statement. Buy homes from people off market, and even if they make zero wedge on the deal, they flip it back on the market to try to make the Opendoor 6% fee. But in doing so, they entertain massive market risk. What if between the time you made an offer and the time you sell, home prices are down 20% like they are in Phoenix? Well, they take the L. And that's why they potentially face massive bankruptcy risk. They have an extremely risky business model. Their business model is so risky that they actually, well, they have no intention of ever buying and holding real estate, which would diversify their risk and lower their risk. But they also are now thinking about potentially just becoming a platform for being the middle person. Oh, we'll just give leads to people who want to buy them and exchange them for like a small fee. They have no idea what they're doing. I'm sorry. Opendoor is so lost because they're losing so much money. All you have to do is look at their financials, and I could be very clear that we will do the opposite of everything Opendoor is doing. Put it that way. That's at least the expectation. Let's see here. Warrants, cash in on warrants will probably be, I should say maybe 2024. So we'll probably close out the Reg A and all the funding opportunities this summer. So between March, well, I should say probably between May and July. And then we'll be removed from anybody being able to invest in HouseHack. And then we turn into an operating company. And then the next basically opportunity for those call options essentially being deployed would be probably 24. Okay, I've answered it like 27 times, and I apologize. Maybe you joined late. But yes, international investors can already invest in HouseHack. I would love to replace BlackRock and Invitation Homes with HouseHack. Do you need a Series 24 on your team? Right now, we're not hiring, but in the future, we will be hiring a lot. HouseHack, I do not expect to be a REIT. HouseHack, I expect to be hopefully a very profitable operating company. HouseHack will not be a REIT. HouseHack could create REITs, kind of like Blackstone does or whatever, and benefit from managing those REITs, right? But HouseHack itself is unlikely to be a REIT. There is no ticker symbol for PP. or sorry, I meant to say HouseHack. There is no ticker symbol for HouseHack. Anyway. That is a full breakdown on everything that is going down with HouseHack. Hopefully that was very insightful to you. What's your vision or scale you believe you'll get to with HouseHack with a 5 to 10 year outlook? I don't know. We'll have to sit down and really do some projections on that. There are ways that it could scale substantially faster than we expect that it could. And then there are ways that scale could be limited. And that's going to, in part, depend on the market. That will become a lot more clear. Let me put it this way. Worst case scenario, we have a lot of great wedge deals that we're up on equity. That's my belief of a worst case scenario. Obviously, worst case scenario is you lose all your money. That's the real worst case scenario. But sort of our bear case is we have a lot of great properties with great cash flow and substantial equity and great wedge deals. That's our bear case. Our bull case is we could take hopefully about the 50 mil that we've raised and turn it into this money printer basically, where we're able to pull out, $8 million out of a hat once a year, then twice a year, then 4 times a year, and just have this flywheel going of massive cash flow. So we do not have any idea what's going to happen, but That's sort of a bear bull case. And then that would obviously lead to dividends or whatever, buybacks, whatever we want to do. I have no idea.